Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, May 24th. I am your host, Jesse Allen. Great to be back in the home studio today, fresh off a week-long trip throughout the Southeast into Florida and more. And back to normal, which is a good thing. And back to talking about the markets. We had a day off on Friday as well from the show. We got a lot to talk about here on today's show. Markets mostly lower here today, but we did see a late rally, late push by quarter beans. Let's bring in our good friend Bryan Doherty with Total Farm Marketing on this Monday afternoon to talk all about it. Bryan, good afternoon to you, sir. And coming back in here this week, we started with overnight pressure in the Globex trade Sunday. We rallied that quarter bean market a little bit. I would have to think that was a positive way to wrap up a mostly lower day today.
Yeah, it was a pretty ugly overnight and early morning session, double-digit losses and things kind of clawed back. And, you look at corn down 2.25 today in July, well off the low. The low, Jesse, 645, and we finished around 657, so 12 off the low. So not a bad day. July corn picked up about 15 cents last week, and December, not as much, 3 to 4 cents. So we gave back a little. But so I would say corn is consolidating, and soybeans, same thing. They came off their lows nicely. It's one of those odd time of years where rain is really beneficial. It's good. In some areas, it's none. Some areas, it's not enough. Some areas, a little bit too much. But I would say overall, it's kind of the same trend that talking to producers last week. We've been kind of in this, well, let's just say it pattern of consistent rains or rain on the radar. But in general, most of the rains have probably been, I'm going to say, on the lighter side. Now, I know some of your listeners, we got 2 inches or 4 inches. But in general, they've been on the lighter side. So with the forecast not so hot, that's fine. But as soon as it starts to crank up, I think, all of these missed opportunities to maybe even rebuild some subsoil might come back to haunt the market down the road some.
Well, and we talk about weather, and you hit the nail on the head there with the rain and having it be, not a widespread soaker. There's some spots that, maybe they got 2 inches, and then there's some spots that maybe the dirt under the pickup truck wasn't even wet. One of those instances. So to me, and I heard this chatter throughout the day today, a lot of folks saying that maybe the market overreacted a little bit to the rain that we saw this weekend and maybe some of the rain in the forecast. But then again, it seems it's really hard to say, but it definitely seems like weather's kind of taken the driver's seat here to start this week.
Well, it has, and it will ramp up from here on out. And in fact, if any of your watchers or listeners know me, they know that I've usually said, look, let's not even kind of talk weather until probably June 15th. It's one way or another, the crop gets in the ground usually, and then 2019 came along, and that kind of blew that theory a little bit that year when it wasn't getting in the ground one way or the other until mid-June. But in general, the crop gets in the ground, and you get rain. You don't get enough rain, but things kind of start really clicking and moving, and that weather from mid-June onward becomes critical. And that's why I just wanted to mention this today, because if you're on the light side of this rain, you're going to sure hope for some more. We don't need to go into June and get hot and dry after that or during pollination. The latest 90-day forecast, though, kind of interesting on the temperature. The whole nation is going to be, in theory, above normal, except this nice teardrop right from Canada right down through the central Midwest will be not above normal. So maybe it's not going to be all that hot during the heart of the next 90 days. But the rainfall is critical right now. Will be throughout the season. There's just not enough subsoil out there.
Well, I know looking at this corn market, I think let's dive into this just a little bit. I'm curious your thoughts here. We've taken a little bit off this corn market. We maybe seemingly stabilized it a bit here. I know marketing year corn export shipments to date currently exceed the seasonal pace needed to hit USDA's target. And looking at China, second day in a row, they haven't bought any new crop corn, but we feel like that demand is still there. But looking at this corn market here, moving through the end of May, going up to maybe that June 30th acreage report. I know there's plenty of volatility out there still, but what are your thoughts on where this corn market is at? Do you think we might be starting to settle into a range, or is that hard to say right now?
No, I think we're settling more probably into a range. If you might remember when we talked, the market peaked on May 7th, and for about 10 days before that was just up and up and up and up. And it went up really on the dry weather. The catalyst was the dry weather in Brazil. That pushed it. And then it was getting dry here. It was kind of cold. And, farmers were in the field, but things weren't germinating and all of that. So you had a lot of uncertainty. Since then, we peaked the market, had a couple of huge down days. So that's a lot of liquidation, or you think it's a lot of liquidation in the marketplace, especially from the managed money. On the backdrop of that, you mentioned export inspections. Yeah, they're 1.924 billion. That's 69% of the projected yearly number. Another good number today at 68 million. We're on pace to meet that at this point. But the interesting thing that as we, kind of again circle this whole thing back to weather, is we're about the market is priced right now. I remember we were talking and I said, I don't think we can move this higher without a weather market. And then promptly, as soon as I said that, within days, we were moving higher. I guess we had a weather market in Brazil. The market seems to factor in. We come back down. We get a fast start to the planting season. Same thing. It doesn't look like we can really move it higher or have end users chase this unless they feel like now they have to. And we'll see what the weather does.
Very, very true. Soybean side of the equation, do you feel like looking at the demand side there, shipments continue to exceed the seasonal pace, and soybeans have really, I think they've already seemingly settled into a range here. To me, it seems like. But what are your thoughts on the soybean market here as we look ahead towards the next round of WASDE reports and that June 30th acreage report?
I don't see how the ending stock number gets any larger. Now, that being said, the crush pace released in May shows a slowdown in April, probably a reflection of higher price or difficulty getting the beans, one of the two or both. But the world needs big bean crops. We've been on the slide here. We talked about where prices may need to go to ration. We saw all of that happen, and now the market needs to consolidate. Critically tight carryout number, 119 million bushels or 17, whatever the USDA last number it is, but it's just tight, and a lot of us believe that the number's probably tighter. It's just not going to show up on a balance sheet. But we don't have much going for us right now. The crush we know has slowed, and all of the export businesses shifted to Brazil or Argentina or both. And so it's a market that's starved for new news. It doesn't have any news. What news it's had is kind of a slant to the rainy side for the Midwest and better weather.
Well, Bryan, overall, I've heard from a lot of listeners, viewers, a lot of producers in the countryside. They've made a fair amount of sales. I think we know that a fair amount of activity has been done, especially some of that new crop. A lot of sales were made. Some caught those highs. Some have made some sales here on the pullback a little bit. But do you have any updated advice for producers here for the next couple of weeks as they're looking at their marketing plan and looking at some of these ranges we're starting to settle into for corn and beans?
One is if you don't have anything done at all, which it's not unusual, but if you don't have anything done to this new crop, despite the recent pullback, get something done. If these markets were hitting today's prices on the way up and this was the new high, you'd probably be pretty excited about it. And for some reason, if you weren't excited before, you should now be excited, because now we're farther down the road and crops getting in the ground, we're getting moisture. Long range forecasts aren't as is menacing. If you looked at that 90-day forecast, the previous one, the entire United States above normal temperatures, most of it below normal in precipitation. These have changed now. So I'd work with that. I'd strive for balance. You don't want to get over your skis too hard, but you might consider on this pullback picking up some December or November soybean calls, so that when prices, if they do rally, you don't second guess it. You just have your sell orders out there and let them get hit. You've already got it on paper. You've already re-owned it. So that would be a strategy to employ. And the other thing is here, just keep in mind what put options do. They put a price floor in. So if we do get some rally up, have orders to buy puts. Love those puts because they put a price floor in, let you sleep at night, leave the top side open, don't fix the basis, all of those good things. They just keep a floor on the futures.
Bryan, let's switch gears. I'd love just your thoughts on the wheat market. I know wheat was down fairly hard on the day Monday. That Wheat Quality Council tour through Kansas, I know that produced a rather big number that came out of that. Looking at total weighted average yield estimate, 58.1 bushels per acre. That's well above USDA's national yield projection of 52.1. And that seemed to be something that kind of surprised the trade here to wrap up last week, and it seems like that's maybe spilled over here into Monday's session as well.
I think it surprised the trade because there was a bias. That boy was so dry early on, and there was question about how to come out of dormancy, and there just wasn't that expectation with some of, well, I'm going to say the spring challenges, cold weather along the way, but it's all looking pretty good right now, or most of it's looking pretty good. So the tour found this, and it's in Kansas. Is the rest of the country going to be like this? What does the rest of the world look like? And you got to look kind of hard right now to really find any big discrepancies, if any discrepancies in the world market. So wheat's got this kind of problem that as it ends, as it pushes toward the end of spring, it's really difficult to make the argument or the bias for prices to go higher when the trend is down, exports are mediocre. The argument is the dollar's weaker, so that should be enough in itself, but it just isn't this year. There's enough ample supply of world wheat that wheat prices are in the defensive, probably when they should be, as they get closer to harvest.
And I think as well on the spring wheat front, those rains throughout the northern plains, the Dakotas, the Canadian prairies, whether or not you saw a lot of rain or a little bit, that seemed to be enough to kind of hold down that side of the wheat market as well as we start this week, Bryan.
It was. Just keep in mind the markets move on perception as well as anything. And the perception is you've gotten a bit of a change in the weather pattern. You've gotten some rain in much needed areas. The crop has gone from not so great to, hey, maybe not so bad. And that's what we're going to find out in the weeks ahead.
Very true. Let's move to livestock. Cattle today just couldn't capitalize on a lower grain market. And I feel like, coming off that cattle on feed report on Friday, traders just, looking for direction in all these livestock markets. Cattle and hogs were lower today, but I think specifically on that cattle market, just trying to find some sort of news, more news to give us a direction in this cattle market.
Right. The live cattle are kind of stuck in the crosshairs here between packers, packer margins and ample inventory, and then the idea of just limited packer capacity and these things. So the cattle market continues to be choppy. If you look at the live cattle market, it's picked up some ground here. It was a down day today, down 75 to 82 in that range there, but generally good consolidation. We've been higher than where we are. We've been lower. If you take a look and draw a line straight across the chart, we're looking at a market that's really for the last several months on the August cattle, give or take $4 or $5 trading 120. That's not a bad place at this time of year, really. We didn't have a real warm spring yet so far, and so maybe that rush for grilling purposes hasn't been as fulfilled. The cattle market looks to me, with the pasture conditions, and they'll probably be confirmed tonight, 45% poor or very poor, that there's cold calls into this mix, both in the dairy and on the live, and yet the market's holding up pretty well. So bigger picture, it's getting friendlier as we go.
On the hog market, we're back up to near testing contract highs, it seems, throughout these hog contracts, but still couldn't find any upward momentum on Monday. But what are your thoughts on this hog market, Brian?
Well, I'm going to say supportive. You got the 115 on July now, and then it tails off a little bit after that. I want to I just want to make the argument that they, technically they look pretty good, especially these front months here. New highs, just a real firm, market. And, whether we can, I'm hesitant because of this verbiage from China about they don't hoarding, they want stockpiling, none of that kind of stuff. No speculation. What does that really mean for the hog market? I don't know, but I think you can dismiss all of that. The hog market is where it's at because the quantity of demanded product is huge, and that doesn't disappear overnight. So it looks like they're well supported into the summer months.
Brian, any thoughts on the dairy market for us here today before we run out of time?
Well, the dairy market's been an interesting market, a really tough session today, down 38 to 74 points. You're going from feast to famine in that market in weeks. And we saw, you can pick your contract you want. I'll look at, for instance, if we want to look at May, rallied twice up to $20. All of a sudden here, within a couple of, maybe a week, 2 weeks, we're almost at 17.5. That's a big percentage when you drop off of that. Milk production report, again, it just confirmed what we were talking about. There's, the dairy producers do one thing well: they produce more and they build the herds. So it's going to take some herd reduction to turn the price around. I think the price is seen as high for a while, if not a long time.
Well, Brian, any other final thoughts you have for us today on this Monday?
I guess final thoughts would be what we've talked about before is you're right in the thick of a weather market. Don't bury your head in the sand too long. There's good opportunities. If not, talk to someone like myself who can provide some bias and direction on markets and how it might all fit together between, let's say, the dairy and cattle and hogs and corn prices. So my advice would be just stay alert, stay balanced, utilize the tools.
Definitely. And if you want to reach out to Brian or the great team at Total Farm Marketing, very simple to do. A phone call, 800-334-9779, or reach out to them. Find all their contact info online at totalfarmmarketing.com. Brian, appreciate the time as always on this Monday. Thanks for joining us. I know you're off next Monday. I'm off too for the holiday, so we'll talk to you in the month of June.
That's awesome. Thank you. Appreciate it. And I want to wish everyone a happy Memorial Day weekend.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. This has been the Monday, May 24th edition of Market Talk. I'm Jesse Allen. Have a great